really feel honored to be moderating the first panel of the first Ethiopia Finance Forum. It's really a great pleasure for me to be here. Let me also welcome all the distinguished participants. I see there are so many people here. I hope it's a bank holiday in Ethiopia today, because there can hardly be any people running the sector now. Thanks to the panelists. Very much appreciate your time and your willingness to share your ideas and views. I think the governor has given us a very good overview of the reforms that have been undertaken, certainly to the extent of the part of the macro reforms that were implemented or run or in charge of the NBE. This gives us a lot of food for discussion, not only on this panel, but also on the panels that will come. I think we have a very good, balanced distribution of the panelists, maybe not so much from a gender perspective, but we have another representative of the government being in charge, also leading the macro reforms together with the NBE. We have a representative of the private sector that is ultimately going to benefit, or hope should be benefiting from the macro reforms. We have a representative of the international community, and we have a representative of the academia, probably going to be the most critical part. We'll see about that. You will notice that there is no representative of the financial sector itself. Why is that? Well, the panels that will come will have a much more active involvement of financial sector representatives. And what we are doing in this first panel is basically to set the stage. Following up on the initial speeches, just discuss the macro reforms in their broad scope, and then the following panels will dive deep into specific subsectors of the financial sector, specific topics, and then at the end of the days, we'll always come back and wrap up and go back to the broad overview. So let me start by asking the government representative, Dr. Eyob, State Minister at the Ministry of Finance. And I've been told, maybe I should say that, to slightly shorten the duration of the panel. So what I will be doing is, instead of 2 questions, I will just be asking you 1 question, combined question, so for us to spare some time. So, Dr. Eyob, if you could tell us a bit about the fiscal reforms, which have not been addressed in as much detail as the other elements of the reform, and how they will contribute to support the further expansion and development of the financial sector. Thank you. Over to you.
Thank you so much, Derk, and good morning, everyone. I thought Governor Mammo gave a very an excellent overview of the reform journey and its early results. So in that sense, I would specifically focus on the fiscal area, because that is what he has not touched probably more deeply. Look, as the President was saying this morning, this reform is a well-coordinated, a well-planned and sequenced macro reform. There was a series of deliberation, discussion internally. Stephen, you remember probably a couple of years back when we had called in several experts, including Stephen Derk himself, and brainstormed on issues. This is probably 2-3 years before the reform. And then we had serious deliberations internally. The macro team meets literally every week. And this is the most important agenda that we had. And with the Prime Minister, we had several sessions. So when the decision was made to engage in full-fledged macro reform, as a continuation of the overall economic, political, and social reform that we are undertaking, the most important point was that this should be done as a whole of government approach, And there should be effective coordination, particularly between fiscal and monetary policy, but also with the real sector planning. So we used all instruments that we had at hand to make sure this reform works. What do we want to achieve? We wanted to achieve a sustainable, stable macro reform so that we can lay strong foundation for the big aspiration we have as a nation. We wanted to be an African lion, if you like, a beacon of prosperity. As they say, the Asian tigers or so, we want, and I tell you, mark my word, this will happen. Historians would say an African lion, as they say, the Asian tigers, or an African Nyala, if you like, if you like endemic animals. So Nyala is better? Lion is all right, okay. So lion, we go with lion. So that we thought cannot happen unless you have a stable macro framework. It's not just about growth. As Governor was indicating, we had growth, but in a very macro imbalance environment. So on the fiscal side, what we did was, I remember, Abebe, the discussion we had with your team, with the IMF team, when we confidently told them, look, we want to see a reduced inflation despite the Forex reform. The IMF team was a little bit hesitant. They were saying we're too ambitious to see 13-14% single-digit inflation. That is not good. How do we do it? And one thing we said was we use all levers. On the fiscal side, a very tight fiscal policy. 3%, this is the usual number we're talking about. This year we are at 1.1% of GDP. That is the deficit number. It's not just about the percentage. The way we finance that deficit is also unique. We historically, as Mam was indicating earlier, we're bragging, zero monetary financing this year. And I always say, I don't need your money, Mamo. That is, the choke we have, internally. But this was not an easy decision, I tell you, because we had a lot of fiscal needs. This is a country that is investing. So that is one important thing. But we said, okay, how do we finance this? Let's increase revenue. So we planned an ambitious 4% increase in revenue. And we are seeing early results are quite encouraging, right? 85% increment in total revenue. If you look at the customs one, 122% increment. Very encouraging results. We achieved this through very deep administrative and fiscal policy reform. The other issue we did was, let's look at the debt issue. There was a significant debt burden that for the financial sector operators, they probably have suffered a lot because Ethiopia's ranking globally has deteriorated. So they had difficulty finding probably correspondent bankings and so on. Exporters, Jamal will come to it, had no incentive to export. Imports are hugely expensive because of the black market operations. So we said, let's make prices right. So we have to get prices right. But importantly, in terms of the coordination between monetary and fiscal policy, a year before the reform, we've set everything in motion. So overall, we see that debt has significantly declined now from by almost half, from about 60% to 30% of GDP. External debt is 13%. We have engaged in a very tough conversation with our creditors, the Official Creditors Committee, with the Eurobond holders. The audience would recall at some point we decided to hold that 33 million per coupon payment to the Eurobond holders. Everyone was saying, why is Ethiopia doing this? They knew we had the capacity. But we did that consciously because we wanted to make sure we deal with the debt issue once and for all by saving 4.5 billion through debt restructuring. That now comes as an important fiscal financing. So Derk, I know you want to make this session brief, so I would like to wrap up. But the key point I want to highlight is this is a well thought out plan and maintaining the independence of the central bank, but effectively coordinating. I think we've managed to deliver as a whole of government, maybe from our assessment, one of the most successful macro reforms in recent history.
Thank you very much for these insights. Thanks also for being on time. Let's switch to the private sector. Ato Jamal, you are a CEO of Midrock, which is one of the largest commercial entities in Ethiopia, so an important representative of the private sector. What's your experience with the macro reforms? To what extent and which elements have helped you in operating in the country? But also, where do you see further room for reform measures that should be taken in the future?
As you said, Midrock is involved in a very diverse and large operation in Ethiopia. We have over 74,000 employees, and all our industries are in highly diverse with agriculture, mining, trading industry. So the financial reform impact us highly. I want to start with where we came from. Before the financial reform, what was the status for us to operate? Ethiopia national economy had been taken over by the so-called parallel market. I don't know why they like to sugarcoat illegal practice by calling parallel market or so. This had severely impacted Ethiopian production and operation because only illegal players were using the parallel market. So the legitimate operator companies like Midrock was suffering. And I'm surprised why Ethiopian economy did not collapse when with that magnitude the parallel market was taken the economy. As I said, we are into local production and import substitution and production for export. So we had seen the impact. This illegal practice, not only just the illegal practice, but also for our commodity producers. Although we are commercial producers, but most of Ethiopia's export commodities produced by the smallholders. And price discovery for that was severely damaged. And our producers, farmers, were not even able to get the minimum wage or the living wage. Because even our partners, international partners are saying the parallel market is this, you can benefit from this exchange rate, where we, the legitimate operators, were not able to do so. Even NGOs were planning their budget with a parallel market exchange rate. So from that quagmire, this new macroeconomic reform has bailed us out, to be honest. On the price discovery, I can give you two examples. Ethiopia's largest forex from export comes from coffee, and this year from gold. And almost more than 90% of those both comes from the smallholders. So an Ethiopian coffee farmer which produce coffee sold in highly competitive and cutthroat international market, and its money was exchanged by highly overvalued birr. So the price discovery was so low, and it was affecting 5 million Ethiopian farmers. 5 million Ethiopian farmers produce coffee, and with 5 dependents each, it's like 20 million. In gold, also the artisan miners had the same problem. So the gold artisan miners, the traders, changed their way to a contraband trade. But the coffee goes mainly for the legal channel. The middle players, the traders, were able to survive because they were addressing it to the parallel market, using their forex for import. However, the local producers were not benefiting from that. In my other cluster in the industry, our manufacturing clusters, using inputs from import were severely damaged because they were not able to use their capacity to run their operation. So when they get a meager resource, they also have a problem to import. Even our banks were not able to open LC because corresponding banks are not accepting Ethiopian LC. So when this Forex regime was liberalized, all that pressure will lift off. And tell you the truth, I have 45 companies, highly diverse in commerce, in industry, in mining, in manufacturing. So I use Midrock as a litmus paper to test how the economy performs. For producers in Ethiopia, we benefited a lot, in general, even including the smallholders. Coffee growers, their earning per share, per their produce has more than doubled. And gold producers have more than tripled. And Midrock, our revenue, we're reviewing our 9 months performance, more than doubled. So this is a huge jump to aspire for a bigger economic increment, and also it inspires us to start big mega projects in Ethiopia. Like when there are some inflation-related issues, most people see because of the Forex official rate increment, inflation will be skyrocketingly high. That's not what happened. I mean, the government has the data to show. From the practice, I can tell you one thing. For me, food is the main factor for inflation. And from the food, 85% of Ethiopians who live in the rural area, their main consumption is maize. And I'm the largest maize producer in Ethiopia. Last year, a maize price for a ton of maize was 45,000 Ethiopian birr. This year, price of maize for ton is only 25,000. I'm talking about birr to birr. So it's deflation rather. There are for some import inputs some inflation, but it was managed. In our manufacturing, we were making more than 100% margin to cover our overhead costs because we were using a very low capacity. Now we can't do that, but our input price has also increased. What the mitigation plan for us was we were able to increase our capacity so we can perform with a low margin and yet make a better profit. That's what happened for us. Thank you.
Thank you very much. I think it's quite telling to see that the private sector always finds a way. The economy did not collapse before, but of course now everything is much easier, and this gap or this dichotomy between the formal official economy and kind of a shadow economy in which a large part of the private sector was driven by the macroeconomic situation has evaporated. We've heard a lot about the fears about inflation going up in response to the FX reform, and that hasn't happened, which I think is one of the major successes of the macroeconomic reforms. From the IMF, and we also heard that the IMF was a bit nervous about this prior to the reform being enacted. So let me ask the IMF representative for Africa, if you compare the Ethiopian reforms with other reforms that have been undertaken in Africa, and I understand you have also experience outside of the continent, maybe the most immediate example or comparator would be Nigeria, which also liberalized the FX reform shortly before Ethiopia. How do you compare the way that the macro reforms were done in Ethiopia with other countries? And if you could also just briefly explain what the IMF is doing to what has been doing to help the design and also the implementation of the reform.
Thank you, Derk, including for inviting me to participate on this panel. First point I have to make is that policy making, of course, is always context, country specific. So while there are similarities in the FX reforms that have been undertaken, fiscal reforms that have been undertaken in Nigeria, very different economy, very different context and circumstance. So there are very unique flavors to each of the reforms that have been undertaken. In terms of what we see here, I mean, I think as elsewhere, for example, as in Nigeria, there was a clear frustration with the status quo ante, with the prevailing arrangement. It was seen as not delivering, it was seen as inducing significant macroeconomic imbalances, distortions. So I think that's one similarity with Nigeria. And clearly, the government had decided, as in Nigeria, to move forward with comprehensive reforms. And that's, after the development of the homegrown program is when we were called in. And of course, it's our duty as when we work with countries and when countries seek financial support from the IMF to always, kick the tires in terms of the government's assumptions, approaches. And it's in that context a lot of the dialogue was had. But what we saw was a fairly comprehensive program where they had gone quite a lot of deep thinking, a lot of technical work. So the ownership element of the program was really something unique about what we saw here. Second, and coming to particularly Ethiopian aspect of the reforms, I think one thing, a point of departure here is that the reforms were absolutely necessary, not just because of the imbalances and the difficulties that were prevailing, but also because the approach to policy formulation had not changed in 30 or more years. So, and I don't know if this is the right thing to say, but the analogy that comes to mind is to many aspects of parenting. Yeah? So, when our children are very young, very small, we put them in cribs, right? With big fences, with big barriers, so they don't fall off. Huh? But as they grow, we of course let go. And we move them to more normal beds so that they can move around as much as they need to and they're able to. The approach here in Ethiopia has been one where there was a lot of control and had not evolved given how much bigger the economy is, how complex the economy had become. It wasn't cognizant of that. It wasn't, it hadn't moved to more modern ways of managing the macroeconomic, the macroeconomy. Yeah? So I think that was another reason why reforms were greatly needed here. Of course, it meant giving up a lot, some control, uncomfortably so in some areas, some of which were touched on earlier, allowing interest rates to move, allowing the foreign exchange to reflect demand and supply, but it was unavoidable and really important. So in Ethiopia, I would say that, this reform was much needed and delayed by several decades relative to other countries. And really much needed because an economy with this complexity, with this, of this size really requires a lot more modern approaches to macroeconomic policy formulation. Now, the thing is about macroeconomic policy formulation though, that it requires a lot of, sustained fine-tuning. Yeah? So over the last year, we've seen significant reforms, but also really very important outcomes. A lot of institutional reforms that were laid out in Governor Mamo's presentation earlier. These are all really fantastic endeavors and really very important steps forward. But and there's always a but with the IMF, will be key is going forward, making sure that policy making remains agile and responds to evolving challenges. As I said, moving from a more controlled system to one where a lot more scope is going to be given to prices to allocate resources, and that will require careful calibration, fine-tuning as these pressures emerge. Again, I like to use analogies, and the analogy here is like gardening or farming. You have to tend to it, regularly. A lot of weeding that has to be done every year, a lot of planting, of course. So macroeconomic policy management, modern macroeconomic policy management is like that. So it will be really, really important going forward also to sustain this fine-tuning. Then lastly, I think it's really important to underscore that why is macro stability important? it was touched on earlier, but I cannot stress enough that, you know, our country here needs, like much the rest of the continent, millions and millions of jobs. You know? And, you know, development challenges are legion. Increasingly also the external environment is becoming really very difficult. So effectively mobilizing the national savings we have is really paramount, really important. But also, you know, to recognize that the financial sector, of course, is the cardiovascular system of the economy. Yeah? And a healthy financial sector, one that's robust, one that is continuing to function well, will be really important to transmit the policies that the government pursues and allow the private sector to get the access to credit to facilitate investment and job creation. So I think it's all interlinked. Great start, but need to sustain the momentum.
Thank you. So I guess there's no plan to close the IMF office in Ethiopia in the next couple of months. Right. Professor Derk, so you have been involved also in the design of the reforms, then you won't be so critical as I expected you to be. Well, but maybe some kind of insights from you on the political economy aspects. We heard a lot about the whole of government approach, and in your book, Gambling on Development, you talk about this and show how successful reformers were driven by what you call elite bargain. But that there's also a risk for that elite bargain to crack open and then, you know, carrying tremendous risks for the economic development. So what are your views on the likelihood of that happening in Ethiopia?
Okay, well, thank you very much. Yeah, just to maybe give a few words to try to explain of how I like to think about it. And indeed, I've written about Ethiopia in the past quite a lot. And, you know, it's this idea of elite bargain sounds like a strange term, but just think that to be successful as a country with its economy, it's not just a matter of just a government there. It needs different partners to be somewhat aligned. You know, government partners, civil society, of course business, private sector, and other factions. There needs to be somehow a kind of a coalition of forces that are not inconsistent with each other. Okay, so as many have said, we had in Ethiopia remarkable growth progress. The governor also earlier gave a very clear explanation, but it came also with its weaknesses. Okay, so Dr. Eyob was mentioning, you know, he tried to be an African lion, and I think, you know, we had lion-style growth rates. We probably did it with the body of a kitten, with very little strength in the underlying structures. And I would say there were two things that made it over time unsustainable, as the governor also said. You know, the unsustainability was on the one hand, you know, let me now mix my metaphors dramatically, but since you were talking about farming, I do remember a very senior advisor of the Prime Minister a decade and a half ago telling me what we're trying to do is sowing the seeds of capitalism, sowing the seeds of the market economy. Now, of course, it was a bit strange because the farmer, or at least the government, tried to be the farmer as well, to a large extent. Now, that's not how economies work. It needs to be the private sector that are the farmers. You can help with growing these seeds, but the work and the hard work needs to be put in by the private sector to create the growth around it. So the weakness in that kind of, call it, deal that existed was, yeah, private sector was there, but not quite there. You were here, but not quite here. and it was complicated. And indeed, that was one weakness. And the second weakness was, what the governor also alluded to and what the reform program also needs to address, is, you know, that skeleton of a market economy needs to be very sensible market-based allocation and policies. And so that's the thing that one is trying to do here. And that's the two things that are important, because otherwise, you know, it can't be a lion. You know, you need to have the private sector and you have to have the foundations. And indeed, you have to have the state doing what it really should be doing is building the skeleton and not trying to do everything else as well. And so that's a bit where we get. Now, that comes with risks, comes with opportunities. The risks are, of course, you know, transitions, changes, comes with winners and losers, comes with pressures, comes with political economy pressures. And so the first thing is, and it's one thing that I've definitely learned across a lot of countries, the biggest enemy of long-term growth is the short run. You know, it's very hard to get the short run right, even if you try to achieve it, because in the short run, all the pains, the pressures, and so on. That needs very careful management, and that's where the risks are, and it needs to be done. But, you know, the good thing is that, you know, there is a plan with ownership here, you know. Director of the IMF, the Africa director of the IMF, and Dr. Abebe has clearly said that, you know, this is what makes the Ethiopian reform plans very strong. It is generally homegrown. In fact, there's other countries now copying homegrown agendas because Ethiopia is doing it. Can't quite name it because they would be a bit embarrassed, but they are using their own plans, exactly the same title, and it's a far bigger country than you are. And it's interesting that they do it because that comes with it is the ownership. But the implementation is where the last thing, it's the last point I want to make, is the implementation where the risk is, okay? You know, progress in this kind of game of the economy comes with an equilibrium of beliefs. Everybody must trust and believe that it will indeed happen. You can set up a plan, but you need to build the belief that indeed foreign exchange is indeed allocated by market forces now and not something else. You need to build the belief that if I come as an investor, it will be seen through. And now that's the hard part. And that means all the time action and showing it and being very transparent and being very clear of doing it and indeed building that coalition with the private sector, consulting, showing it, and, you know, and dealing with the frustration if it doesn't go as fast as it should go, if there is still, you know, puzzles like why is there a 15% parallel market exchange rate if the market exchange rate should be the market exchange rate, and things like that, and working on it and looking for ways to have a joint understanding why this may be the case, and then keep on trying to get the whole system work smoother. And I think this is where we are, and it's all now in the implementation and building the confidence. Things like this should help with us. This is not about lecturing from the bank or from the National Bank or from the government. This is all the things we're doing. It's about having a dialogue and building the trust that actually the progress is there. And then we see already quite a lot of successes. We get Midrock telling us it is better and getting the trust. But then we'll need to see, can we get the private sector to lean in and make this actually a success? Thank you.
Thank you very much. So would you say that the work ahead is the longer way to go? And I guess that also, or is it the longer way but the less steep part of the road? Maybe.
Like this? Absolutely. Look, we've really thought about this. Well, I want to reassure the audience that our sense is this is a one-in-a-generation opportunity to transform this country. As I always say, the quest for prosperity has been elusive, and we wanted to deliver this in one generation. So the road is long. That is why some of the decisions are not focused on short-term gains. You know, we've made very tough decisions. Decided we're not taking any commercial loans while there are important projects ongoing. Why? We wanted to ensure their sustainability. We wanted macro stability. We invested in significant projects that have long-term impact, like the GERD, for instance. You know, a lot of money, but it has significant impact. We invested in digitization. We saw the future, in a way. I mean, if we had the whole layout, this is something very close to my heart, but how Ethiopia had transforms on the digital space is astounding. But this happened with careful planning. We said Digital Ethiopia 2025, outline things that we need to do, Go check that thing. We've ticked all the boxes. The Prime Minister was on a talk show recently, and he was saying, we've delivered 100% of it, and we're doing another plan. In the financial space, for instance, let me just mention this. This is quite important, because we talk about macro reform as an important ingredient for increasing saving and investment, right? But, historically, as you know, our saving and investment gap has been quite significant for a decade or so. But we're beginning to see a change, at least a little bit of movement up. And it's coming from small scale savings, through Teleber and other digital financial transactions. Millions are saving now. We have 51 million Teleber users. We have about 23 million people that are saving digitally and that are getting credit over 60 billion, but a small amount of credit. So they are saving, they are also investing. So that investment, that focus on where we want to go, we have building blocks, right? Let me end with this. We said by 2030, we want to be an African beacon of prosperity. But we said by 2018 Ethiopian calendar, which is 2026, 27, we should saw the signals that we are heading there. But we saw the signals a couple of years earlier already. And I think our goal of 2030 is almost there. GDP is going to quadruple in about 10 years' time, that you will see. We are already discussing about middle income trap. People think we're a little bit overambitious, but we are. This month, the whole government was discussing what would happen when we reach middle income. Jamal has said rightly, we'll get there, but we want to make sure that we also think about that and prepare for it. So I think collectively, Ethiopians understand that the road is a little bit steep and tough, but with clarity that we'll get there. I think that is what motivates us. That's what makes us work hard. That's what, makes this financial sector vibrant. We're very happy with the progress of the financial sector, but they need to go a little bit further. I'm sure we'll deliberate on that in the next couple of days. But beware, we'll get there.
Thank you very much. I think we still have a couple of minutes to open the floor to the audience. I see there's one gentleman over there.
Thank you very much for giving me this chance. I will be very quick. As an economist and the governor of the central bank for the last few years, I get to know that the two policies, the monetary and the fiscal policy, they have to be coordinated. That's not the issue. The issue is that I feel that the monetary policy should react more fastly than the fiscal policy, because the fiscal policy has got so many constraints. The approval of the parliament, the implementation, it takes almost 1 year to do that. How far, I'm very happy about this, what the central bank is doing at the moment, but I'm questioning how far the central bank, the National Bank of Ethiopia, is really independent from the Ministry of Finance. That is my question to His Excellency from the Ministry of Finance. Thank you very much.
Thank you. Any other? I see there's some.
Thank you very much. It is great pleasure to be here. I am Abebe from Peace Microfinance. I start by saying, may peace be to all of us. My brief question, there is interbank lending existence in the banking sector to ease liquidity constraints. We are deposit-taking microfinance. We are proud of our country, and the government policy allows to mobilize deposits from the general public. This is the greatest privilege that we have as a microfinance. What is the National Bank of Ethiopia view on introducing a structured inter-MFI lending framework to help manage short-term liquidity shocks among microfinancing institutions? By the way, microfinance institutions in Ethiopia, we are banks for the poor. If we see our capacity, we are by far serving the grassroots level community, and we are proud of. Can MA5 be allowed to lend to each other within the regulated caps? This is what we aspire for. Thank you.
Thank you. Any other interventions? Yes, there's one over there.
You. I'm Sunil Benimadu. I'm from Mauritius, the stock exchange, and I have a question to the state minister. Looking at the data from the central bank governor, I saw that real rates on T-bills have gone from negative levels to +5 in 1 year, so from -13 to +5. So this means that the cost of borrowing from government has shot up massively in 1 year, given the fact that inflation rate is still around -13. So we're talking about almost 18% to 20. So what has underpinned that sudden increase in real rates, and how sustainable is that cost of funding for government going forward? Thank you.
Thank you. Well, Dr. Eyob, looks like you're in much demand.
Thank you so much.
Some of the questions were actually rather to the NBE, but since you're the closest to the NBE on the podium.
Sure, I can take that too. So to start from that question, I think this is something that we should discuss further probably in the panels. I'm sure the NBE team has taken note, and then they will deliberate and respond. Now, in terms of the independence of central bank, I think this is something that we have discussed thoroughly, deliberated on, and as you have seen in the new NB Act, a very carefully crafted, giving central bank its independence, but not the bank that operates in a vacuum, in a thin air, that operates in Ethiopian economy, in the context of the Ethiopian economy. But really, when we had fierce macro debates, Mamo and I are very good friends, as you know, but we probably fight intensely on issues. He taking his own position, and I representing the Ministry of Finance, and whoever wins on that agenda wins, but independent discussions and deliberation. So absolutely, I think that's something that we are very proud of. The bank is transforming itself, being modernized. It's not only about modernizing monetary policy, but modernizing central bank itself. And so I think we are headed in the right direction. It's a process, but I think we are headed in the right direction. In terms of T-bills, that's the difficulty of this kind of reforms. On the one hand, we wanted that macro stability, macro reform. We want to make sure inflation is down, and it's not only by monetary policy, but the fiscal policy is important, and how you finance deficit is critical. So it has a course that we have to take. Treasury bill yields have increased from historically, there was financial repression, as you know. There was 1 or 2% interest rate that we were paying to Treasury bill historically. Over time, over the last 6 years, we've changed this. But lately, with this reform, it has now become actually a positive rate. An average yield is about 16.5% now. So yes, there is significant cost, but it's very important for the economy. That is why we now focus on those short-term things, but on the broader thing. You cannot continue monetary financing and think of an African lion. So you have to get prices right, and whatever cost that entails, you have to live with it. Yes, so I'm sometimes complaining when I sign those Treasury bill interest rate to many of the financial institutions here. By the way, they're making a very good investment. In fact, recently, corporates are beginning to look at the Treasury bill market. EIH, I don't know if Dr. Brook is here. This week, they have purchased about $7 billion worth of treasury bills. Jamal, so you're next. You should think of an important investment area, and I encourage all others to because it's the safest and now decent yield treasury bill market that we have.
Thank you very much. I think we're already a bit over time. I want to give you, well, Dr. Eyob, you've spoken enough. I want to give the others the chance to leave us with some final words, maybe also contemplating kind of the geopolitical instability that we're currently facing and whether that should have an impact on the further development of the macroeconomic reforms or not so much. To Abebe, please.
I touched on this a little bit earlier, but to elaborate, I mean, this issue about continuing to fine-tune policies, continuing to respond to shocks, the point Stefan was making about, you know, this being a bargain between government, the private sector, civil society, and it can, you know, staying the course, you have to convince other, you know, you have the private sector and others that this is a fundamental shift. So that also, I think, applies to the external environment. Government here cannot control what happens out there. It's a small open economy that is going to be buffeted by these shocks. So, you know, fine-tuning macroeconomic policy to respond to these shocks will also be important to avoid worse outcomes. Huh? So it is, you know, increasingly uncertain environment, increasingly one which is becoming difficult for developing countries, at least to follow, you know, the approaches that others have used, Asian tigers, etc. So I think, you know, we as Africans need to be thinking also about what kind of approaches are going to be the ones needed in this somewhat chaotic world that we're living in. So yes, absolutely. I think it is going to be an important influence on policy making and one that we have to remain very alive to. Thanks.
Thank you. Professor Derk?
Yep. Well, to follow a bit on this, I think the most important thing for whether it's a domestic or an international private sector to find a country's policy environment attractive is to have confidence that there is policy certainty and that reforms that are going on that will be seen through. Okay, so that's the key bit, and I think important steps are being set. I think, you know, I actually do think there's a historic opportunity for Ethiopia to actually get into itself into a position of have growth, but also with stability going forward. And in this international environment, I do think that countries like Ethiopia actually have an additional opportunity, you know. You're not being targeted. There is an opportunity here, you know, the flying geese that, for example, from China we're going to fly here, they were for a long time not quite flying here. But actually there's much more reason for Western and Eastern capital to flow to Africa now. And so these are moments, and let's grab them. It does need certainty, it needs collaboration with different sectors. The financial sector is going to be key in this in terms of, you know, creating that foundation of a market economy that functions with credit allocation that's based on scarcity, T-bills that respond to scarcity, the right incentives. Massive opportunity, and let's grab it.
So as I'm not a politician, I can't dwell much about geopolitics, but however, the world is in a roller coaster in the geopolitics. I do believe, and I share the idea of Professor, Ethiopia may have a comparative advantage on that. But I want to say that we do need to sustain this good early result in order for Ethiopia to prosper. And the major liberalization of those policies have already shown us the fruits, but we need to keep doing that and relax more. But two things need to be addressed, I believe. One is addressing the issue of illegal trade, contraband trade, and that, and also focus on the import substitution. We do have commodities that drain our forexes 4 years. And we have the necessary natural resource to do that here. For long, Ethiopia has never given due attention for import substitution. It was only to enhance export. Now there is a focus. The new homegrown economic reform focuses on import substitution. But I think the finance industry should support the manufacturing in Ethiopia for Ethiopian market, as Ethiopia itself is a huge market. And we have the right input for that, whether it is agro or mining. They are the main input for industries, and Ethiopia is endowed abundantly on that. And with that focus, what our state minister said, that being an African lion is achievable in our generation. Thank you.
Thank you very much. So, yeah, quite encouraging. Well, if I've got anything out of this, or if I want to summarize, I think a major part of the conceptual work of the macro reforms has been done, but it has to keep being adjusted, being fine-tuned. It's going to be a long way. Thankfully, Ethiopia has the best long-distance runners in the world, although Yvonne would probably disagree. I'm quite confident that kind of the further implementation and fine-tuning of the reform will succeed. Well, let me again thank you, the 4 panelists, for your insights, interesting discussion. I think a round of applause is probably in order. Also, thanks for the participation from the audience. You're still, well, we haven't lost too many, so that's quite good. Yvonne, I think that completes our panel.
It does, and let's give them another round of applause.